Good afternoon, and welcome to today's Leaf Mobile Webcast as part of the Planet MicroCap Showcase. It is now my pleasure to turn the floor over to your host, Darcy Taylor, founder and CEO of Leaf Mobile. Sir, the floor is yours.
Thank you very much. Good day, everyone. I believe we have 25 minutes for us to go through Leaf Mobile, and let's get this thing lighted up and started. So I'm going to start by highlighting the total accessible market and indicating why the Leaf Group is so well positioned to capitalize on this market. So very quickly, mobile is eating the world. This revolution started in 2007 with the iPhone. 50% of the world is on smartphones today. India is introducing another 500 million in the next few years. So mobile is quite simply eating the world right now. As far as gaming is eating mobile. Where do people spend money on mobile? Overwhelmingly, they spend their money on games, with gaming accounting for more revenue on iOS than any other category combined. In a mobile world, gaming is the natural growth vertical to own. And then gaming is the entertainment vertical currently. It's the largest and fastest growing consumer entertainment segment. And if you're gaming, you're most likely doing it on a mobile phone today. So a quick snapshot of Leaf at a glance. We like to say Leaf's the biggest mobile company you're probably yet to hear of. We recently went public in February, and we currently trade on the TSX under the ticker Leaf, L-E-A-F. We execute a distributed studio operating model and have a software technology platform that's changing the framework of mobile game development. We're the global leaders in the casual idle genre in the U.S. and worldwide by in-app revenue. And we've been awarded the top 50 developer by Pocket Gamer in 2020. We have a portfolio of 10 live games and a very deep pipeline. We are headquartered in Vancouver with approximately 140 employees in 2 studios. And our main revenue markets are the U.S., U.K., Australia, and Europe and Canada at this moment. Our pro forma forecasted annualized revenue based on our Q3 results is 80 million, and we will be reporting our full year results at the end of April, the 29th specifically. If we talk about our journey and how we got there, we were founded in 2018. We've done 2 acquisitions of studios, one in April 2020, and the most recently transformational acquisition of Eastside Games for $150+ million in February. So I'll highlight to you that currently we are in a structure phase, bringing the next pieces into the puzzle to build for the next level, which is our scale phase, with recently announcing our new CFO, Jim McCallum, joining the group, appointing KPMG. But we haven't been resting on our laurels. We do have an LOI for an additional acquisition of truly social games to increase our momentum coming through 2021. To quickly talk about management, I would put our pedigree of management up against anyone else in the space. We have 60 years of combined experience in mobile games across multiple companies such as EA Sports, Hothead Games, as well as Eastside Games acquisition. We have 50 years of combined experience in IP management and marketing with the likes of IMG Endeavor and Creative Artists Agency, 20th Century Fox. And we have 100+ years combined within our group on AAA game development across multiple companies such as Activision Blizzard, EA, Rockstar, Ubisoft, as more. And additionally, we've added more bench strength to our board. I will just highlight the most recent addition, which is Birgit Troy. who heads Constellation Group's M&A portfolio under the Valaris Group. She has come on to join us, one, because she understands our strategy about being a mid-market consolidator, and also she sees the upside potential of where we are in our growth trajectory. So we're truly excited to have her join the board. So let's quickly talk about how we generate revenue. We have three growth pillars that drive our revenue growth, and I'll touch on each one of them. The first is games development and publishing. We refer to this as our organic growth, primarily driven by IP-driven franchises. We generate revenue in this vertical by in-app purchases within the games, as well as ad revenue because we operate a free-to-play mobile game model. The second pillar is our Idle Core technology platform. We refer to this as our distributed growth, and this allows for us to generate high-margin SaaS-type revenue by licensing our Idle Kit platform to development studios, and then making a piece of the economics across that licensing, as well as the upside on the game revenue share as a sweetener. And then lastly, our M&A portfolio of growth. We refer to this as our acquired growth. We generate revenues as a studio consolidator, and this provides us increased competitive advantage and as well as scale and unit economics. Now, to highlight what we've been up to since listing on the TSX, I'll just highlight a couple of March and April points of interest. Within our portfolio and product and game sector, we have announced a major partnership with RuPaul to launch the RuPaul Drag Race mobile game. We're absolutely thrilled about this because we think we will create a category in the free-to-play space with the first global icon in LGBTQ, bringing a game to market, and this is slated to enter the market late 2021. Additionally, within our distributed growth and Idle Kit has been tremendously successful on bringing and expanding our partner base. We've announced 3 new partners, most recently Mighty Kingdom 2 days ago, coming on to join and develop games with us on that platform. But also, we have been pioneering the NFT space with the launch of our game creation tool set for NFT products, the NFT Idle Kit, and then on top of that, launching the Budfire Nifty Stash collectible game on 4/20, which we are tremendously excited about the response for that, and tremendously excited that the fact that we have Max Flavell, the co-founder of Dapper Labs, as well as the co-creator of CryptoKitties, working with us in one of our studios at Eastside Games for the development. So we feel this is a new diversifier of revenue and something that we are truly excited about the future prospects of this meta universe of game development. And then lastly, as referenced, we have an LOI out currently for the acquisition of Truly Social Games, which should shore up and bolster our ability to scale and deliver game growth over the next 12 to 18 months. So if you look at product pipeline for 2021, we have been executing against our milestones and checking boxes. The checks indicate games that we've either soft launched or announced. We have 7+ games in production currently. The slate of games launching is weighted more predominantly to the back half of the year, so you're going to see that ramp up in revenue coming later in the year. But if we look at how the portfolio comes together with our new pipeline, our existing games, as well as our portfolio pipeline, we are looking at almost doubling our portfolio from 2020 to 2021, going from 10 games almost to 20. And the majority of our current portfolio is entering into the high earning or high EBITDA phase of the next 1 to 2 years. So we have a very strong organic growth trap line and pipeline going forward. Now, diving a little deeper into IdleKit, for those who aren't familiar with it, very simply, IdleKit has had tremendous interest from game developers, basically indicated by the amount of people we've had that come on to partner with us. The reason for their interest is that IdleKit allows them to de-risk the development for their games, and by our meaning of de-risk, it allows them to build faster with better economics and an increased opportunity for success due to its proven monetization. And we benefit from this because it fortifies and distributes our revenue growth model across multiple studios and exponentially across multiple games. So we see this as a tremendous ecosystem of growth, and we like to say it allows us to grow without growing, meaning that we keep a very lean head studio and head office, but we distribute our growth with key partners around the world to bring games to market, as well as allowing them to develop games independently using our system in a SaaS-based model. Additionally, this has the knock-on benefit of providing us a very high-quality trap line for future acquisitions. We look at this as a way of exploiting synergies and adding scale, and we have, I will say, a very clear line of sight and a very clear view of early-stage game breakouts due to the fact that we have integration of our data set with our partners, allowing us to see where growth is coming from, as well as allowing us to work with partners over time to understand the culture and whether there would be a fit within our group studio model. Pardon me, jump the slide. So if we talk about one of the big highlights on IdleKit, and that I referenced earlier before, is the introduction of our NFT IdleKit. We have done two major initiatives over the last week. The first was launching NFT Kit and partnering with Wax to do a drop of in-game assets from the select group of our game portfolio, being the Trailer Park Boys, Cheech and Chong, and our Bud Farm group. And then additionally, extending and doing a specific NFT game, a collectible card game with called Bud Farm Nifty Stash that we launched also on 4/20, which we've had tremendous response from date, and we're very encouraged by that mix of launching and providing NFTs from our games, and then having them be utilized in an exclusive collectible game, so blurring the lines between the in-game and out-of-game universe. So we believe that we have a tremendous foundation for growth with a very robust platform of 3 revenue streams, being organic growth through our games and publishing portfolio, our idle kit platform, and then lastly, our acquired growth through M&A. We have seen a 70% CAGR growth from 2018 to 2020, annualized on a consolidated pro forma view. Our studios have been EBITDA positive since 2017. So we feel that right now we are staged to take that next step forward and be valued in the public markets for this growth. And if we look at public market multiples, I will reference 2 areas because we believe our company is a mashup of a gaming platform tech company as well as a mid-market consolidator. Our North Stars that we look at in the mid-market consolidator is the Stillfront Group out of Scandinavia. You can see the multiples they are trading at are anywhere from 7.5 forward revenue as well as or 7.3x LTM. And then from a platform or consolidator, from a platform tech base, I'll point you to Unity Software, where they are receiving multiples over and above what we are on a consolidated basis. And Unity Software is actually a piece of tech that our platform sits on top of, so we're very complementary to that platform and work closely with them. And if you look at Leaf Mobile, currently market cap approaching $290 million. Our LTM revenue is roughly 3.8, and our view is versus the market, we would probably be looking at a generational re-rate opportunity once the awareness of our company starts to spread wider on a retail base. Additional catalyst to this is if you want to participate in the gaming space in Canada, obviously scarcity is a premium. From that, there's only 10 actual companies in the Canadian public markets that you could consider in the gaming space, but none that I would argue would be pure play gaming players that would align with us from a scale and size and a diversified revenue stream. When we talk about structure, I will highlight a couple of notes. Insider ownership is very strong, approximately 70%. Of that 70%, 80% is locked up over long term, and earnouts based on the acquisition of the studios as well as management at the Leaf Group. And not only are we big believers in the company as a whole and driving it forward long term, when we've had opportunities outside of blackouts, we've been in the market personally buying and have purchased approximately 26 additional million in shares since February between the management. We have analyst coverage from 2 companies, the most recent being 8 Capital launching with a buy rating 2 days ago. Those are available online if you go to Haywood Securities as well as 8, both with strong buy ratings going forward. And to wrap up, to provide some time for Q&A, I'll just do a quick summary of where we think we are very well positioned. One, we believe due to the multiples out there that there's a huge re-rating potential for us as not only a tech platform but also a studio consolidator versus peers. Our idle kit platform of distributed growth has a very great blue sky opportunity for additional revenue streams, and we're just starting to gain that momentum and that footprint, not only in North America, but also in wider geographies such as Australasia and Latin America. Our M&A trap line is robust, not only inbound, but also utilizing our idle kit as an incubator. We have world-class talent currently, and talent attracts talent. So we feel from a leadership perspective, we are in a very good space, as well as us being the largest publicly traded free-to-play mobile game company in Canada has us entering into the radars of bigger institutional players. From a timing perspective, obviously this is a watershed moment from gaming. Tremendous growth, not only over the last year, but over the last 3 and projected forward with very strong tailwinds. And then lastly, Scarcity. Obviously, in the Canadian markets, from a publicly traded perspective, not many ways to play the space at scale. We are that company. And even if you look south of the border, still very limited ways to play this space with market models such as yourself. So with that being said, I think it looks like we have about 9 minutes left, and I will end there and stop and address any questions that are put into the system here. So it looks like we have a couple, actually quite a few questions here. So I'll try to get through as many as we can. One question here, actually is combination. It says, are we considering doing a rollback or share consolidation? And do you have any plans to list on other exchanges? Yeah, super good question. Regarding the first point on share consolidation, we did announce a share consolidation at 10-to-1 as a part of the acquisition of Eastside Games. That is still in the plans and will come into play during our AGM, which will be announced post April 29th on our full year results. So a very short answer, yes, we are considering it. It has been announced and it is still in play. Regarding, do we have any plans to list on other exchanges? Another very good question. I could say that we are always looking for opportunities to widen our shareholder base and open up the opportunity to invest in Leaf in other geographies and other markets. So that is a major strategy for us. So I would say very simply pay attention and stay tuned for further information on that. Okay, so just scrolling through. Next question coming from, I can't actually read the name, but I'll read the question. What makes the company unique and different compared to your peers? Super good question. I think there's 3 elements that make us different. One, we operate a distributed model, and what we mean by that is that when we acquire studios, they remain independent and operate and are responsible for their own P&L to drive their earn-out potential and provide them, I'll say, their culture and their working arrangements that have been success to date. We don't like to come in and I would say disrupt that, but what we'd like to do provide from the Leaf Group perspective is the access of capital, the shared learnings to improve their business, and other expertise in plumbing to take, I would argue, the things that don't allow you to make games efficiently and effectively, whether it's accounting, legal, back-end M&A. We take that off their plate so they can focus 100%. The second piece is that we believe being a mashup of a tech platform as well as a publisher and consolidator allows us to have a much wider surface area of revenue and increase our chances of continued success with the ability to tap into a very holistic or a flywheel of revenue in developing games and developing our business. Okay, next question. How are you thinking about genres and categories within the gaming or mobile game space in the context of both your game development and M&A activities? Super good question. As far as game development, we are building on our strengths. Our strength is casual and specifically idle, and we are refining our idle kit platform to improve the efficiencies and economics of us developing games ourselves internally, as well as our partners. So that is the core focus at the moment. But with that, our M&A strategy is obviously looking to allow diversification from a game portfolio perspective, and also the expertise for us to extend idle kit into new genres and allow the benefits of our kit software to other developers that might not currently be in our game space. So it looks like we're slowing time or running out of time, and it appears that the next 4 questions I've addressed in the previous question. So unless any other comments or questions, I will wrap up our Leaf Mobile presentation. And thank you everyone for your time and attendance.
Thank you. This does conclude today's webcast. Thank you for your participation and have a wonderful day.